You, along with several other companies, have been pushing the idea of a Bitcoin ETF for a while. The SEC has never been persuaded. They always have objections, including the transparency of the underlying market. Nonetheless, you are launching essentially an ETF-like product without the SEC's blessing. So explain to us how it'll work and why you believe it's legally kosher.
This is taking advantage of Rule 144A of the 1933 Act and amended by the Jobs Act, which basically allowed for certain restricted securities to be traded broker to broker. And we're taking advantage of that opportunity to offer shares of the trust to qualified institutional buyers. Now, these are the largest of the large institutional buyers, not just accredited investors, but institutional buyers that manage more than $100 million in total assets.
And so when the institutional buyers have this, I mean, is there some sort of second order effect, or is this only the transaction has to be limited? It kind of stops once it gets to that institution?
Well, so the interesting thing, and one of the reasons why it's likened to an ETF, it's not an ETF, but it's likened to an ETF, because it has the open-end creation and redemption ability like an ETF. It will be quoted on OTC links. It's on the over-the-counter market, so there will be a secondary market. So it could look like an ETF in that form as well.
There exists GBTC, the Grayscale Bitcoin Trust, kind of similar. How is this different? That is also an exchange-traded Bitcoin product that's OTC. So how is this different?
Well, that trades over the counter as well. It's open to private placements on a periodic basis, but that's for qualified investors or certain high net worth investors. This is for qualified institutional buyers. It will trade openly in the secondary market day to day, so there'll be day-to-day liquidity, and there is that open-end creation and redemption facility, which should allow it to trade, the market price to trade closer to NAV.
Right, so the GBTC often trades with a large premium over NAV. This, because of the open-ended creation redemption, should be much tighter.
It should be over time. If the market develops and trading activity develops, yes, we believe so.
All right, so on the retail side, though, I mean, have you completely given up on that? I mean, why do you think that's taking so long to get some sort of approval?
Well, I think the SEC has their legitimate concerns about transparency, about the underlying markets. I think the industry has made a lot of effort and has progressed quite a bit in terms of addressing those markets. And I think our product, in the way it addresses and prices Bitcoin, also addresses those issues. But this is, we haven't abandoned. This is a parallel path. We've been working on this for quite a while. And I wouldn't look at it as a workaround, but just a step forward, in this case, in the institutional channel.
Now, let's talk about the demand for this product, because if you talk to crypto people, they're always like, the institutional money is coming. The institutional money is coming. That was the mantra at the end of 2017, throughout 2018. Meanwhile, there are more and more custodial solutions that would theoretically allow institutional money to take place. How much of a market gap do you think this product will address in terms of money that's theoretically on the sidelines, that's not in Bitcoin, that would be with the right product?
We believe this could be a game changer for institutions, because there hasn't been an institutional quality vehicle for Bitcoin access. Bitcoin is not clearable. It's not doesn't have traditional custody solutions as of yet, and it forces institutions to open up accounts on different OTC platforms. And so what this does is bring all of that into one security that they can trade on their traditional brokerage firm. They can use the same processes, trading and clearing processes, that they're used to with any other security.
So what type of security or safety or, I guess, insurance is sort of provided to make sure that, folks have some sort of confidence in what's...
Yeah, definitely. That's one of the main aspects of this product as well, is storage. We're using, or the trust is using, best practices in terms of Bitcoin storage, plus insurance. And one of the key features of the trust is insurance from a syndicate of A-issued or A-rated raters.
Could you see yourself doing more coins down the road?
Potentially, yeah. If this is successful, I think this particular structure provides that framework for potentially more institutional level product.
Just going back to the pure retail one, as you mentioned, that track still continues. How far do you think the gap is right now between what the SEC wants to see in terms of the development of the market, transparency, so forth, and what you and other companies that are trying to offer this product have right now? Do you believe that's getting narrowed?
I think it's getting narrowed. I think there are avenues for which to price Bitcoin in a more consistent way. As you talked about earlier, the custody solutions are developing, and I think in the coming year we'll see more viable custody solutions that will be an option for a retail product.